But when you have a currency that's backed by something tangible, you have a much stronger situation.
You don't have to give us a target necessarily on this, Louise, but it sounded to me like basically you were saying there's an internal target there of 60, but then there's one that's much lower than that. Was I understanding that correctly, or potentially?
It could potentially be 60 on both, because the current level of the dollar on that broader measure is 96. So the numbers are completely different, and 96 is, we had, first target was 96, we hit it, we bounced back, and now we're coming back and in the process of perhaps breaking the next low, which could take you to 85 on that broad-weighted currency. And that is partway down in the declining trend. So yes, it could go lower. But if you maintain simply the thought of the trade-weighted dollar, 60 is a pretty deep target.
If you look at the dollar index, Louise, and then we'll move on, and you've broken that 78 to, say, 82 area, which was the multi-decade zone, when you snap through that after, say, 35, 40 years, is 60 enough, do you think, on the downside? And I know I'm just putting you on the spot here, but in your mind, is it, because you would think at least 60, but does even in the back of your mind you say to yourself, well, this could be much worse than that? Or I'm just curious on your thoughts.
No, I have no idea how to answer that, Eric. I'm not sure that I do have that's a pretty bad case scenario, so I don't want to contemplate worse. I mean, maybe we won't get there if they can rectify what's going on. But that was our ultimate target. It's as far as we can count given the chart, and I'll stick with that. It's bad enough.
In closing here, Louise, if you, looking at the charts and looking at everything, do you see a case then more for inflation or deflation, or do the charts give you anything on that at all, or not necessarily?
I think you're looking at both. I mean, clearly the fact that you can't raise short-term rates is telling you that you've got serious deflationary pressures in jobs and wages and housing and commercial real estate. So that is clearly still in a deflationary trend. I mean, where you've been getting some interest here, which may prove to be inflationary, whether it relates to the dollar or not, is that the market's going up here. Whether it can maintain an uptrend, we'll see. But you're getting certainly a re-interest in investment, and I think that the commodities are certainly part of the dollar reaction. It'll be interesting to see if some of these deals to pay for commodities other than in dollars, whether it's rubles and yuan or whatever they come up with, but certainly some of those suggestions that we've been concerned about are starting to be discussed in the news and in the media. But I think that you will continue to have the inflationary forces. I mean, we've done work which we revisit every once in a while, which was called Looking for Inflation in All the Wrong Places way back in 1996, thinking that we were seeing a major shift out of the capital goods arena where inflation has been intact in this country for the last century, moving into what we have called consumer essential inflation, food, water, and energy. I mean, I remember 10, 15 years ago, we had the broccoli indicator. I mean, you used to get 4 stalks of broccoli for $1.99. Now you only get 2. Hershey bar used to be, half an inch thick. Now you buy a Hershey wafer, even for a little bit more money. So there is inflation going on in a very subtle context. A pound of coffee no longer contains a pound of coffee. It contains 12 or 13 ounces. So it's been inflationary in the consumer essentials, and they try to hide it by maintaining the size of the package or whatever. But the point is there. People who go shopping for food know that it's becoming more expensive. And as we have population growing from under 3 billion when I was born to the 6 billion we've got now, going to the 9 billion that they're anticipating in the next 40 years, I think it's a no-brainer where the pricing power is going to be.
Louise, I said that would be the end and the close, but let me ask you one last thing. When you look at the charts and you see, I'm going to call it a lack of stability or troubled times for this country, right? Because if we're in this structural bear and then you have, multiple decades of support break on a currency, as you said, there's potential for destabilization or major problems. And when you look at the French model, when they had the Assignac collapse after all the massive money printing, right, they ended up with Napoleon. and a series of wars, the Napoleonic Wars, very destructive. The Germans, with Weimar hyperinflation, ended up with Hitler and the destruction of World War II. And you're not saying we're going to have hyperinflation, but my next question for you is, do you worry about this, with what you see in the charts and the trouble in the charts, do you worry about the freedoms of people here in the United States?
Well, I don't think that's something that we're seeing in the charts, but I think it's something that's clearly a worry. I think the last administration spent 8 years destabilizing the Constitution. And unfortunately, for all we had hoped would be forthcoming with a new administration, a lot of the elimination of lobbyists hasn't occurred. And I frankly don't like the vocabulary of a czar of any sort or description. So there are, little indications of that concern or fear that could creep in. I think that there's a lot that has to be changed, but I think the most telling aspect of what's going to be happening is the fact that with the elimination of pension funds, with the reliance only on 401ks to which most employers don't contribute anymore, you're going to end up with a retiree population, and many of which may be the baby boomers who have lost their pensions, etc. You're going to end up with a retiree population that for the first time may not have the wherewithal to maintain a middle-class lifestyle, to contribute to the economic maintenance of this country. And that's what bothers me the most, because I think that that is really undermining our forward-moving standard of living. So what we see happening as food prices go up and the inability through wage price savings, pension, etc., disappear, we're going to have some serious problems on the part of our elderly, more so than we've seen to date, in my humble opinion, going forward, that is going to undermine the economic stability, yes.
Louise, let me just ask you, because I brought this up on the air and you just touched on this point, but I'm wondering how some of the people, because obviously you don't have these worries and many people don't have these worries, but there's a segment of the population that's elderly that lives on Social Security and these fixed incomes. It's very difficult for them to get by as it is. And I've just said, I don't know how they're going to feed themselves if we have the kind of inflation that you and I both think, can result from this. Is that sort of in a subtle way what you were even bringing up there? Not just the ability to contribute to the economy, but even further to just how will they feed themselves on those fixed incomes?
Well, that's definitely part of it. And I don't mind adding a little editorial commentary, which goes back to Patrick Moynihan, who was the only one that has ever really defined the fact that Social Security is not an entitlement program. Social Security is an insurance policy that every single one of our citizens has paid into throughout their working careers. And I find it extremely upsetting to hear it talked about as an entitlement program. That money should be segregated, and it should be there for the retirees who paid into their insurance policy over the years of their working career so that they have something to fall back on. And I just wish that there were a public protest to the definition of Social Security as an entitlement program.
Outstanding, Louise, and I completely agree with you. Let me say this in closing for people. You have started a newsletter, and this is the first time ever, correct me if I'm wrong, that the public can actually participate in some of your really what has been phenomenal work over your career. And the title of your newsletter, which just kicked off, I believe, yesterday or the day before, is Tech Points. Can you just talk to people about that and how they can get involved? We'll link it on our website on your interview page, but if you can give them some information on how they can get involved in that, that would be great.
Okay, well, certainly they can go to our website and contact us through the emails that are there. Jeannie Creasy is in charge of the production, so PR for that. And it's not going to be buy and sell recommendations. It's going to be educational technically. It's going to give long-term perspective on sectors, on leadership. There will be a section on ETFs, and then there will be commentary on other markets. It's not going to be stock-specific.